My experience is this: in my experience, 30 years in the financial markets, it takes a long time for the markets to learn the true characteristics of an asset. Bitcoin's only 13 years old. Most money managers do not understand the most beautiful characteristics of Bitcoin, which I, as a credit manager, view that Bitcoin is actually a short credit position, meaning when you own Bitcoin, you have a short position on sovereign debt. And I love that. To be clear, I own Bitcoin and I own gold and I own silver and I own other hard assets. So everything I do is probabilities based. Everything I do is based on mathematics. And that's what's great about credit, because credit is all math, okay? Equities, you can call it math, but there's a lot of subjectivity to equities because, oh, I see a company growing at this rate. Fixed income is exactly that. There's no growth in fixed income. It's a fixed contract. So credit is pure math, and that's why I am very comfortable with credit as an engineer. Engineers are typically good at math. But here's how I get there. Very simply, look. The total global financial assets in the world are 900 trillion US dollars in today's dollars, okay? 900 trillion US dollars. That includes all global debt, not just government debt, global debt, bank debt, provincial debt, state debt, muni debt, structured debt. That's about 400 trillion. It includes all global equities. It includes all global currencies. It includes gold, which is 10 trillion, for a total, and it includes all global real estate for a total value of $900 trillion. That's what I term as my total addressable market, because Bitcoin is a financial asset that, in my opinion, is going to eat the lunch of a lot of these other financial assets, in particular bonds. I've spent 30 years in bonds, and I can tell you with no degree of uncertainty, they are absolutely the worst investment you can possibly make for your money. And that's $400 trillion of this 900 trillion pie. Anyway, stick with me. $900 trillion. I believe that Bitcoin someday will become the reserve asset, global reserve asset. And when that happens, and it'll probably happen because a country like Russia wants to get paid for its oil in Bitcoin rather than in US dollars. Why? Well, Bitcoin is monetary energy. It requires proof of work. And natural resource energy for monetary energy makes a whole lot more sense in my mind than natural resource energy for worthless and debasing fiat dollars. As an engineer, I like the conservation of energy principle. I know Michael Saylor's a big fan of that too. So if that happens, is it crazy to think, again, if Bitcoin becomes the global reserve asset, is it crazy to think that Bitcoin gets 5% share of $900 trillion? Don't forget, right now the global reserve asset is treasury bonds, US treasuries. If Bitcoin gets 5% of $900 trillion, that's $45 trillion. What's 45 trillion divided by 21 million fixed supply of Bitcoin? That's $2 million per Bitcoin. That's with a 5% market share. In today's dollars, what if it gets 20% market share? That's how you get extremely large numbers. So this is all I am saying. I'll start with a 5% target. It's not a limit, it's a target. And 5% of 900 trillion is 45 trillion. 45 trillion divided by 21 million is 2 million US dollars per Bitcoin in today's dollars. Put a probability on that. I say I do a probability distribution, or I can do a binary distribution. I don't want to lose your viewers too much, but let's do a very simple binary distribution. What if there's a 10% chance Bitcoin attains my price target in today's dollars and a 90% chance it goes to zero? The expected value of that binary distribution, meaning only one of two outcomes, is $200,000 per Bitcoin. Well, it's trading at 40,000. To make the math easy, 1/5 of where that probability distribution says it should trade. Now you can actually change the distribution as you like. What if you say, okay, it's a 50% chance it goes to zero, a 50% chance it goes to 2 million. Well, then all of a sudden that expected value is $1 million of Bitcoin in today's dollars. So Danielle, all I'm saying is you got to look at these. It's like going to the horse track and you've watched a horse train and you think this horse is one of the top horses in the race, but the racetrack is giving you a 100-to-1 odds that it'll win. And you're like, man, I think the odds of this guy winning is at least 1 in 10. You're supposed to put bets on that guy because the track is giving you odds that are in your favor. And it's the same with Bitcoin. It currently is trading in the markets at 1/50th, or sorry, it's currently trading in the market at a probability of it getting to $2 million of only 1/50th, right? A 2% chance. I'm taking those odds because I think the chances are it gets there. I'm not going to say over 50%, but certainly over 30%.